Hi guys, welcome back to TradFi and Bitcoin Club. Today we'll be discussing about how to buy Bitcoin on EMI. So, to help us understand this topic, we have Karan Gill, the co-founder of Swapso Bredit. He also runs an organization called Bitcoin Bharat, where he educates basically students about BTC, about Bitcoin. And yeah, that's all that I'm handing over to you, Karan.
Cool. Thanks, Divan bhai. Uh, cool. So, hey everyone. I think some of you might know my pitch and the product from Dharamshala. So, anybody who was not in Dharamshala by any chance?
Karan, are you sharing I think you are sharing wrong screen.
No, I think I was
Now it's
sharing full screen. It's fine now.
yeah. Now it's fine.
Cool. Okay. So, hi everyone. I'm Karan. Some of you know me because of Bitcoin Bharat. I invited a lot of you to our sessions to speak about Bitcoin, and some of you know me because of the Dharamshala pitch competition. My audio is clear, right? And the screen
Yeah,
is clear.
yeah,
Okay,
yeah.
thanks. So, guys, we are building this interesting product called Bredit, and just to give you a brief before, like how we work, what is the architecture, right? What you can achieve with this product. I want to start with my own journey. So, I'm a chemical engineer by degree. Somehow landed into Bitcoin in 2024, and I'm the person who wants to buy one full Bitcoin for myself. And from economic perspective, I might land into top 1% or 2% of India. Well, I will be earning from 1 to 1.5 lakhs a month using my salary from the traditional job, which I can do, right? But in that manner also, I can't afford one full Bitcoin today because the cost of one Bitcoin is roughly $78,000 today. In Indian rupees, it will be like 70 lakh rupees or something. But I can't afford that today. And even if I try, Bitcoin price will keep on increasing in the near future. So in future also, it will be very difficult for me to acquire one Bitcoin. And I was looking for like different products available in the market to achieve that one BTC goal using different techniques. One of those techniques is like I can take leverage or futures position in different exchanges where I have two things. First, the risk of that particular platform that platform will shut down. They might default or something. And the second is the volatility risk. Bitcoin can drop 20%, and if I'm taking 5x leverage, my complete investment will be gone. Right, so trading is very risky. The second option is whatever stake currently I have, I put that into a Bitcoin backed loans, borrow money from there, and then convert that money back into Bitcoin. It also create a risk of liquidating my current position. Let's say I have $50,000 in Bitcoin. If I put that to a pool for Bitcoin backed loans, there will be like let's say 66% or 70% LTV. They will give me. So I will get like $30,000 to buy another Bitcoin. That will also create a risk structure around how I acquire my Bitcoin. So we thought, okay, if we can get loans to buy cars, house, gold, even iPhone, then why can't I get loan to buy Bitcoin? Like that was the basic fundamental thing with which we started initially. We tried different structure, and some people like Amol know me from like last 1.5 year or maybe 2 years. So he knows the process, like how we evolved over time. Our model was different in the starting. We changed that according to some terms and everything, right? Currently, we are trying to build the credit system for Bitcoin. That means you will be able to buy Bitcoin the way you buy a house or a car. You just pay the down payment of 20% to 50%, and we will add up extra remaining amount, maybe 50% to 80%. And we convert that whole amount into Bitcoin today itself. So, for example, I come to Bredit today and say, okay, I want to buy one Bitcoin. Price of one Bitcoin is $78,000. We will also do a demo calculation from the website of Bredit. So don't worry about that. So if I come today to Bredit, I put let's say 20%. 20% of $78,000 is roughly $16,000. I put $16,000, and the rest amount will be added by Bredit. We convert that whole $78,000 into Bitcoin today itself, and we lock that Bitcoin into a contract. And then you repay the complete amount. Once your repayment is completed, that Bitcoin will be released to your self custody address, which you predefine at the start of the contract. And this whole product is non KYC. All the loans and settlement will be in stable coins. It can be USDC or USDT, and the loan tenure can go up to 5 years. So that is the basic idea of this product. If you want to calculate like how much, also like I have one more thing to share, that is this simulator. So if I start with, let's say, I want to buy one Bitcoin today, then the price of 78,000, roughly 79,000, I'm putting 20% down payment and loan tenure up to 5 years. It incur me an interest rate of 10%. And in Bredit, the interest rate is from 8% to 12%, which will change according to the loan tenure and the down payment you provide. After that, as we know, that Bitcoin can drop significantly in a shorter term. Let's say in 2 months or 3 months time period, Bitcoin can drop 30% or 40%. In that scenario, you already had a glass on LTV and how the Bitcoin backed loans is working. If price of a particular collateral is dropping and that reaches to a strike point where the value of loan and the value of collateral is similar or roughly 1% in difference, they liquidate your asset. That means they sell off your collateral to recover the loan. This is a very standard procedure in Bitcoin backed loans, also in most of the uh, products available in the market right now. So this can also happen to our product. To prevent that kind of situation, we also provide this security or insurance kind of feature on top of your current loans setup. You can choose up to 11 months, like 2 months, 5 months, 11 months. Uh, And for this, you have to pay extra fees of security, which will add up on top of your loan amount. And with that, you have a, let's say, EMI of $1,300 for 5 years to acquire one Bitcoin at today's price. So this is the structure that we are working on. On the backside of it, we have some liquidity providers which provide liquidity to buy this Bitcoin. So let's say you're putting 20%, we have extra 80%. That extra 80% is coming from liquidity providers like Spark or Aave. They provide the standard liquidity at around 4% to 6% variable interest rate, depending on the market. And we use that liquidity to make it possible. So this is the brief summary of what we are building at Bredit. Any doubts so far?
Uh, Karan, you mentioned, can you go back to the simulator?
Sure,
Yeah.
yes.
So this monthly EMI is calculated uh, like based on the plan which we take. Like the EMI amount includes the insurance or it excludes the insurance.
It excludes the insurance that you can pay at the start of the loan.
Okay.
Because if we increase that insurance, then LTV will increase.
Hmm. Yeah, yeah,
And if LTV will increase, that insurance will become more like no more and more kind of expensive.
yeah. Hmm.
And for this insurance, this risk hedging, actually, we are buying put options from Deribit on the back end to risk this, but look to hedge this risk.
Hmm. Yeah, yeah. Okay,
So
okay, great. And yeah, guys, if you have any questions, today's session will be much more interactive and not like uh, the sessions which we usually do. So if you have any questions, like feel free to unmute and ask the questions, or else I have some list of questions I
Can you
can
hear
go.
me?
Yeah.
yes, yes.
So that insurance thing, you said it only goes up to 11 months. So do you get to like renew it after 11 months if your loan tenure is 5 years?
Yes, you have to renew it depending on like the price of Bitcoin. So if your LTV, like let's say price of Bitcoin increases and your LTV drop to like 45% or 50%, in that case, it's your call that you want to renew that or not. And that also, like if Bitcoin price drops and LTV is lower, in that case, your renewal prices will also be lower because put options cost lesser if you buy at a lower price.
So say you bought the insurance and Bitcoin price was currently 79, and
Mhm.
like after, like at the 11th month, the price is now at 60,000 whatever. Okay.
Right. Okay.
So so the price has gone down, your LTV is at 100% now. So
Right.
when the insurance ends, you get liquidated or what?
Yes. If insurance is not active, in that case, you can get liquidated.
Okay, so you have to buy insurance if the LTV is 100% or just let it get liquidated.
Yes.
Okay.
And Karan, can we buy insurance at any point of time, or like uh, is it mandatory to? I mean, it's not mandatory, but let's say I didn't buy insurance at the start, but now I feel that I should buy it. So can we buy it in between or not?
You can buy it anytime. It's an add-on, so you can activate it anytime in the loan tenure. But it totally depends on the price of Bitcoin. So currently, let's say at the start of the loan, we usually buy it at a 80% of the current price. Let's say 78,000 is the current price. So your strike price, you'll basically we buy a put option at the price where you will get liquidated if Bitcoin drops down, right? So in that case, it costs less. But let's say Bitcoin price drops and your liquidation price is very near, then it will cost a lot to buy insurance at that time. If price
Ah,
increases and your
So
LTV is
it's
understood.
lower, then
cheaper
it
when the Bitcoin price is higher, right?
correct.
Yeah.
Yes, because the strike price is your liquidation price.
Yes.
Karan, can you like just keep the simulator screen instead of this screen? Like we can
Sure.
hear
Yes.
you. Even if you, yeah. So,
I have a question. Can you hear me?
Yes. Yes.
yep, go on.
Yeah, so I was just wondering that, like the recent uh, data privacy bills and the anti-corruption stuff. So I was just curious as to how you guys are navigating those risks.
So we are not touching any fiat from any of the countries. So we are using stable coins, and stable coins is treated as a crypto in most of the countries. So if we are not touching INR or any other local currencies, in 90% of the countries, we do not need to file any of the regulatory stuff.
So then on your platform, is there a way for someone to see at what price point, as in can we play around, say current Bitcoin price is 78K,
Right.
and what is the expectation of BTC price to be in 11 months? Say, as earlier I think Yash showed Yash gave an example of 60K, right? And in
Right.
that case, if you do not buy insurance protection, then it will go down. Like, is it possible for people to play around and see for themselves what are the risks that they are taking, and what is the cost to offset those risks on the platform?
About the cost, you can use this simulator. So this simulator is using actually the real data from debit itself. So you can see the cost in the simulator only. About the simulation of different scenarios, right? Depending on the Bitcoin price, we don't have that. We can build that. So probably in 1 2 days we'll build that in this website only.
Liquidation price at what price? You need to put it somewhere over here.
Right. Also, like one more thing that I have to share is there are two different tracks in this product. One, either we can use liquidity on some different chain like Base or some other blockchain, where we have like cheaper liquidity and we don't have native BTC. Instead, we have like a wrapper BTCs of like CBBTC or WBTC. We can use that liquidity and automate this whole thing on a smart contract or a blockchain level. The second option is we use off-chain liquidity, and instead of using a blockchain or smart contract, we use a multi-sig wallet of like two or three multi-sig, where we have one key. The second key is with the liquidity provider, and the third key is with the user. Which setup you prefer as your choice? Because it's a long-term loan, so like 5-year loan, and in 5 year, sometimes like blockchains even vanish, or like some of the companies even don't last for 5 years. So which of these tracks will you prefer?
I think everyone
I
would
think,
prefer the second one
The
yeah,
multi-sig one, right?
yeah.
because there are like
Because
bridge hacks in like the wrap BTC, and you don't want to be exposed to that risk. Like, what if the Bitcoin, like wrap BTC ka price goes below the price of Bitcoin because there was some hack in some bridge or whatever, and now you have to explain it to everyone. Oh, we did not buy actual BTC, we bought wrap BTC, and that's why this is happening.
right. So that's why like we have like both options available, and we are like figuring out both the ways moving forward. So
There's also
just
another
taking
company in US that did the same thing. They also
Pyrus.
do the second model, not the first one.
Pyrus.
No, I think it's called something else.
Ladder.
It's just
Maybe Leaden. Yeah, maybe Leaden.
okay. But Layden have like this B2X product, which they like, you give like 50% of Bitcoin, and rest 50% is loan, something like that, right?
Huh, it's like a normal
Yeah.
product where you just give Bitcoin and you get a loan and then you pay it off whenever you want.
Okay.
There used to be a credit card company in the US. Uh, its name was called, I think it was called Bold Card. Bold or Bolt, one of those two names. And they
There was
used
a
to
bold.
use the same model.
Okay.
So they would make you deposit your Bitcoin into a multi-sig with like one of them as the key holders, you as a key holder, and some third party as a key holder. And they would give you a reduced interest rate because you were borrowing against the Bitcoin and not as a pure credit card. So up till a certain point, you would get like a 7-8% interest rate, and after that, you would get a 24 or whatever the credit card rate is.
Nice.
If you could make that, that would be fun.
In India.
That would be fun.
Okay. भाई हो गया मेरा एफआई वगैरह से अभी
गेटबिट वालों को बोलो,
स्टार्टिंग
गेटबिट का आम बना के बनाओ, उनका तो हो गया ऑलरेडी।
हाँ मतलब बट एफआईयू के अलावा ना एनबीएफसी पार्टनर भी चाहिए होगा इसमें तो
यस, क्रेडिट कार्ड इशू किसी को तो और को करना पड़ेगा।
हाँ नहीं क्रेडिट कार्ड इशू के लिए तो वी कैन टॉक टू अदर पीपल लाइक ये जो मर्चेंट प्लेटिनम मर्चेंट्स होते हैं इसके वीजा के और मास्टर कार्ड के
हाँ
उनके थ्रू भी हो जाता है कुछ एपीएस के थ्रू भी ये इशू तो हो जाता है क्रेडिट कार्ड वगैरह बट वो इंटरेस्ट रेट कम करने के लिए ना वो क्रेडिट खुद से जाना चाहिए तो उसका थोड़ा सा देखना पड़ेगा कि
हाँ।
क्या रेगुलेशन है क्या और इंडिया में यार हर दूसरी चीज का थोड़ा रेगुलेशंस पक्की है मतलब बढ़िया नहीं है सिचुएशन ज्यादा
Uh, Guys, just a thing. Please continue the conversation in English because some
Oh,
people
sorry, sorry.
join from maybe from other countries and some also join from southern part, so they might not understand what we are discussing. So yeah.
ओके
Maybe
cool.
once India
Sir,
gets an
I also have a
ETF for
question.
these things now, then it'll get easier because then you can borrow against the ETF, and that is very easily done. Until it's just
Right.
Bitcoin, you can't do it. But once you have an ETF, then you can easily borrow.
The ETF will be regulated product, so
Uh,
borrowing against regulated product is easy. Even today, I was studying about this gold-backed loans, right? Quite similar to Bitcoin-backed loans, but like 45% of the gold-backed loans AUM is just from India,
ooh.
and only the Muthoot Finance have like 1.4 lakh crore in AUM, and the director says that this loan should be repaid in 1 year, only 12-month loans.
But are gold back loans all reported? Like a lot of them are just people giving their gold and getting cash. Now, who writes anything about that?
That is like extra. So this is the organized market only. So the total organized market is like 3.5 to 4 lakh crore in India,
Huh.
and the biggest player is the smooth mode only.
Huh. In US, when all the stock market goes up, people feel rich. So usually, when their 401k goes up, they feel rich. In India, it's when gold goes up, they start feeling rich.
Right.
Uh, Karan,
I
one
have
more
a
thing.
situation here. I think you can help me or suggest me something.
Yes.
Like I entered in Bitcoin when there was a bull run, and now the price is down. So is there any way that I can get benefit from your product in any way? Do you have any options like you can suggest me any way?
Right now, it will be like a new Bitcoin acquisition. But I think you can try out that B2X product by Leather. That might help you because in that product you will get similar kind of services, but you deposit 50% of your Bitcoin and they will give you double of it, and the rest 50% will be loan. So, for example, let's say you purchase Bitcoin at 100K. Today the price is 80K. You put that 100K ka one BTC in B2X, and they curate a loan for 80K for you, which you repay over next 12 months. And at the end of like next month, next year, you will get like 2 BTC at average price of $90,000 or whatever. The average price will be 90,000, but eventually Bitcoin price can increase.
So you should also put that in your simulator or somewhere where, like, along with liquidation price, you also tell average price of the Bitcoin you will get after 5 years is like, say the price is 79 right now, you can say 88,000 or whatever it comes out to be.
This will be like original price of Bitcoin plus interest, right?
Yes. So like all the down payment plus all the EMIs that you paid divided by the Bitcoin that you got, that is the average cost of acquisition for the user, no?
Right.
So you can write that amount somewhere so people know like the current price is 79, I'm getting it at 80, but I'm getting more at this price only.
Correct. We'll include that in the simulator only. Like in
Mhm.
this calculations, we have that like you are repaying like 80,000. If you add like this 80,000 plus your deposit, then it will be
80,000
like the
80,000 plus deposit divided by the Bitcoin amount would be that.
right.
So if you take an insurance, it would be 95,000 in this example, and if you don't take the insurance, it would be 80,000. How would it be 80,000? That is too low. Like if the price is 79, how is it
No,
80,000?
it's not 80. It's 80 plus 15 because the loan is 63 and with 10% APR.
Okay, okay. So it's 95, na? Barabar.
Yes. Yes.
Correct. But whoever asked the question, there is no shortcut. Like if you bought in a bull run, there is no shortcut as such. You just have to buy in
Correct.
the bear run as well.
Keeps taking.
Karan, one question in the chat. How can we
Yes.
do down payment without KYC? I think
Without
you are
KC, like
depositing
you
USDT. Yeah, you can go.
So for like the
Yeah.
down payment, actually like we have some on-ramp partners. So let's say if you're from India, paying from India, the on-ramp partner can be Unocoin. So you do KYC with Unocoin and purchase through them. And if you want to go through that KYC path, you buy USDT using that KYC path. If you have other ways to get your USDT, you already have some USDT available. It totally depends on the person to person case. But we don't do KYC on our end because to accept stablecoin payments, we do not need to. To get stablecoins in your wallet, you need to do KYC with your local authorities. That is the regulations.
Or just buy like non KYC USDC, no? Like you don't really care if it's KYC or not, right? As long as it hits your wallet.
Yeah. Uh, Karan, I had some questions like, have you figured out like, let's say if a borrower, like you will have different kinds of borrowers. Like, there might be borrowers who might miss one of the EMIs, and like, but still they want to continue. So, how will things work in that specific case? Like,
I think his audio is getting disconnected. That's what the notification is.
oh, my audio?
No, Karan's audio.
Oh, okay.
He's turning off his Wi-Fi.
Guys, I'm audible now.
Yeah.
Yeah, we can hear you.
So, Digan bhai, it's not about it's not an unsecured loan. Actually, it's a secured loan. So, we all have that Bitcoin which we purchase as a collateral. So, the
Yeah.
first security is that only. So, and in any case, in any edge case, we do not have collateral less than the loan value, because if Bitcoin price drops down and we have that put contract in place, so that put contract value increases. So, in every scenario, we have more collateral compared to the loan value.
So if someone misses an
No, no.
EMI payment, you just adjust the EMI payments, future EMI payments, right? Or
Yes, so
you tell
we
them to like pay a penalty or something.
yes.
Yeah, yeah. Got it. Got it.
So that penalty, like if you miss the EMI, the penalty will add up into your loan amount and your LTV
Ah,
will
okay.
increase.
Got it. Then, are you aware? Like, you might be aware of these flash crashes. So, like, for example, BTC crashes in some particular exchange, and like flash crash. So it crashes from 80K to directly sometimes goes to zero, sometimes 100,000. So these flash crashes do happen. So in your smart contracts, how are you tackling this risk? Like, have you indexed something, or like how are you tackling this flash crash risk?
So in case of smart contract, actually this will be a downside, that it will be dependent on the Oracle price, right? Whatever price the that Oracle is presenting to the contract, and it will take decision based on that only. That's why like we are trying to shift on that multi-sig setup where this kind of flash contracts can be manually handled.
Okay, okay. So last in the last session, like Roxam also has something similar product where they are giving loans against Bitcoin, where like the person Luca, he said that at Roxam they will be using like indexed price of multiple exchanges, and this is how basically the loan will work. So sorry, the pricing will work. So this is how they will ensure that, let's say if BTC flash crashes in Binance, but it doesn't affect the average price. So maybe you can do something similar.
Right. So like taking price EPS from multiple exchanges and averaging that out.
Huh.
Yeah, yeah, yeah.
Either you average it out or you just calculate the difference and see that it's not too far off. If it's too far off, you just disregard that price. One of these two methods.
Like this is
So
a good
like
idea.
on Binance 2 years ago, the price went down to $4,000 or something. 2 or 3 years ago, I don't remember, but it went down to $4,000. So you can just disregard that 4,000. Otherwise, the average will also come down because of that $4,000 price.
Correct. I think this makes sense. Like we can build something like this only.
So when you do it
Yeah.
the multi-sig way, the liquidation part is done by you or the third party.
Uh, it will be handled by the third party.
Third party is some exchange, na, like Uno Coin or someone.
No, no. The liquidity providers are usually not exchanges. These are some like financial asset managers or something sort of that companies which have like uh, dollars or USDTs available with their wallets, and they want some yield on that. So they are more like companies on a broader scale. You can say like BlackRock is putting some money somewhere. So BlackRock is the that liquidity provider. So there are multiple financial liquidity providers like that. So liquidity providers are not exchanges.
So who are yours?
Currently, we are for that decentralized way, for that blockchain or base way, we figured out with Spark Finance and
Mhm.
Aave. And for multi-sig way, we are still figuring things out. I have meeting with Bioeconomy and some Dubai people. But that
Okay.
is not figured out. That multi-sig way is not figured out. And we stressed on that part recently because last 2 weeks we have seen like hacks of two big DeFi pools, right? Which got
Ah,
like 295 and like 240 or something. So to total like more
Yeah,
than like
Aave, in Aave only there was some
yeah,
hack, no, recently, 280 million or
yeah.
something.
yes, that was Drift protocol. So that Drift and like these two protocols got hacked. So I believe that the DeFi is not that secure. So multi-sig will
Obviously, it is just one multi-sig person like making the decisions.
yes, yes. And that Arbitrum thing also, like the Arbitrum Foundation something, they actually froze that asset. So it's not decentralized also. So
Huh.
so we are moving things on that front, based on these scenarios.
Karan, on that note, if the contract specifies that it's basically under the control of, say, Aave or one of these liquidity providers, because they are putting in 80% of the funds. And over time, maybe once the buyer has put in 60% of the funds, that fund can be unlocked by the buyer. Is it going to be in that manner that whatever money investor puts in, that can be unlocked by him immediately, and the rest can be is basically under the control of whosoever has provided the fund. And with every EMI payment, this this component that investors can unlock keeps on increasing. Is that how it is?
Okay, so like as far as the control is concerned, control will not be in the liquidity provider's hand. If it's the base contract, then it depends on the conditions. And if the multi-sig, then the control is distributed in three parties. And about the redemption of that loan, these are like long-term loans, and that is specifically what we are looking for, right? So they can't like immediately withdraw their funds from the loans because that fund is already logged into the 5-year loans or like 2-year, 3-year loans. So they can't immediately unlock. If the user side is concerned, let's say you paid like 50% of your loan, can you withdraw 50% of your Bitcoin? That is not true. You can withdraw your Bitcoin middle of the loan depending on the price of Bitcoin. If LTV is very low, you can withdraw some of your Bitcoin and then LTV will increase. So there will be upper threshold to the LTV where it can go after the withdrawal of your Bitcoin.
Okay,
Why
so if
will
like Bitcoin 10x's, you can like get most of it out, basically,
Yes, correct.
right?
Correct.
Basically, bring it back to the LTV you started with, right?
Yes, that started will be like 80% or something. So uh, depends. Like we have not decided on that upper cap of like
Ah,
80%, 60% or whatever it will be. But this kind of feature will be there.
okay, nice.
a liquidity provider be okay with a multisig when they are the one putting in 80% of the amount, and the customer is putting in the remaining 20%, and a platform is matchmaking these two, right? Liquidity provider and customer. So do you think they will be okay with giving you one third of the control and giving customers one third of the control when they are the ones who are bearing the maximum part of the load?
Correct. So actually, like in DeFi, there is 83 billion dollars of USDT or stable coins, which is there in this DeFi ecosystem, right? And the only option that they have currently is like putting that money into some DeFi pool and getting like 4%, not 4% even like 2.9% to 3.5% or 4% of the consistent yield, right? And in that case also they have this kind of risk that that pool can go down. So like the liquidity support is enough in the market that we can utilize this particular time period to get this kind of product done. If you ask me same question like 3 years back, the scenario was completely different. The liquidity was not there in the market, so at that time, that the yield which they were getting from DeFi pools was from 7% to 18%. So in that case, they had like a better deal in DeFi pools only. But right now, DeFi pools are not giving more than like 4% or 5%. That is the maximum scenario. If some DeFi pool is giving more than that, that means either they are a new chain or they are more risky compared to the stable ones. So the biggest one is like Aave, Maple, these kind of products, and they maximum provide 4 or 5%.
And the DeFi protocols aren't locked, na? So like you aren't locked with them for like 2 years or whatever. You
Correct.
can get it out at some point.
So they have this board type of flexibility. They can get out at any point of time you want, but that interest rate is not also constant. Let's say you enter at 5% today, you get according to 5% today, but tomorrow if the demand for loan is less and the yield down to 4%, then you get according to 4%.
So you
So
would have to find a third party for every loan, na? So like if someone goes for a 5 year loan, you would have to find a third party who's okay with the 5 year tenure as well, right? Basically किसी को तो
uh,
FD बनाना पड़ेगा 5 साल का. Like someone has to make like a fixed deposit of 5 years with you, right?
correct. So it's not individual. Instead, we will find a institutional player who will put in like let's say 10 million or 50 million in one go, instead of like finding individual people for every loan.
But you would have to like do some contract with them where they are like you can't get this money out for the next 5 years or something like that, no?
Right, yes.
I just feel it's very difficult.
That's why the multi-sig part is difficult.
Like if you take 10 million loan at like a 5 year contract thing, and then you don't get the loans, what are you going to do with that money?
That
Buy
like,
Bitcoin.
but so it's not like that. Like so, nobody will like sanction me money if I don't
Oh,
have demand.
like a credit facility. Like you take as much as you want and it'll be this much percent. Like that, no?
Yes, yes.
Ah, line of credit, sorry. Also, what is to stop you from, like, say, you have a liquidity provider in Dubai or whatever, and price of Bitcoin is 5x. One person took a loan for 5 years. It has been 4 years. He has paid his almost his full amount. But
Mhm.
now you just meet up with the Dubai guy and say, like, hey, like, buy me a house in Dubai. I'll stay here. We can just take this Bitcoin. We have already got like 4 years of payment. So that is enough. You make like a big run for it.
Correct. That risk is there in the current setup. So
Because there is no like legal document in India saying that you did this
correct.
with someone.
Yes.
And
So
the
there is.
same goes the other way also. You can talk to the customer and like fuck over the Dubai guy.
That can be a scenario, but that is like the extreme scenario in which I decided, okay, my company is not doing well, so I should fuck either one of these guys. But we actually we are thinking for some structure where we can make our vote, like the swap source vote or Reddit's vote, as a community driven vote or something.
Don't go that route, right? Why? Why make it a vote?
Just letting you guys know, this stream is getting recorded and streamed. So yeah, we can
Twitter pe na?
probably
On Twitter, na?
Twitter pe. But
Right, right. So
recorded also. So the thing is, like, expletives might come. So I just wanted to point that out.